Ray Dalio is a big deal in the world of money and investing. With a net worth of around $20 billion, he's the guy the central banks go to when they have questions about money. Now, get this, there are currently over 600 hedge funds in the US, and a hedge fund is basically a professional investment company that manages large amounts of cash. And Ray Dalio's company is Bridgewater, and it is the #1 largest, most successful hedge fund in the US. Now, we all know that 2022 was a terrible year for investing, and we're all hoping that 2023 is the year that it all turns around. However, in this video, I'm going to share a discovery that I made when analyzing the latest moves of Ray Dalio, and it is a bit of a warning to all investors. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so what most people do is that they watch and they listen to what the big investors are saying, but I think it's even more important to take a look at what they are doing. So we're going to do both. Firstly, let's listen in to Ray Dalio as he explains what is going on in the world of investing right now, and then we'll take a look at the major moves he's been doing with his own money.
We're now in the 12th and a half cycle. You know, these cycles, you know how the cycles work. You're 12 and a half cycles since 1945. 1945 was the New World Order, you know, new monetary system. And you know what happens. So let me take you through it quickly. You get a funky economy, weakness, and so on. So what we had, of course, in 2020 with the combination of COVID, and then also the move from the right to the left. It was a distribution of wealth. And so how did you do that? Government had to send out a bunch of checks.
Yep.
And the Federal Reserve, where did the government get the money from? The Federal Reserve lent it. So we have an imbalance. And of course, that put a lot of money in the system. You've got the demand, you've got the cycle, classic cycle, right? Stimulation, credit becomes debt, then you have inflation, then you have a tightness of monetary policy. And so where are we? So we now in a classic spot where we've got a relatively high real interest rate. Real interest rates went from minus 175 basis points to plus 175 basis points, right? You've got a cash rate that's relatively high. Cash used to be trashy. Cash is pretty attractive now. You've got an inverted yield curve.
Say that again. You said trash is now more attractive?
Cash
is trash, is what you used to say.
Yes, cash was negative,
right?
1.5%, 2% real rates. Terrible. Now cash is relatively attractive.
Right.
So we recently heard that Ray Dalio has changed his tune on cash, going from cash is trash to cash now being very attractive. So onto what has he been doing with his own money, and this is his hedge fund Bridgewater Associates, and we can take a look at their most recent trades. So their portfolio is a very big portfolio, valued to just under $20 billion. And it's made up of hundreds of positions, but let's just take a look at the top 50, as these are the largest positions. And what do we see? Apart from an increase in their #1 position, which is in the S&P 500, here is the warning. I've been following his portfolio for a number of years now, and I have never seen such large reductions in his positions. Almost a quarter, and again 24%, 24%, 26%, up to almost 30%, and these positions are hundreds of millions of dollars. So this is tens of millions of dollars coming out of stocks and into cash. And let's just take a look at the top 50 it's just a sea of red with major reductions. A small buy here, again selling 26%, almost 30%, 35%. A couple of buys, the big ones are in Berkshire Hathaway and also Bank of America. Then major selling, this one 50%, 30%, and then a new position in JP Morgan. He's betting on the banks. And again, more red and major reductions. So this is the warning to investors that the smart money is clearly preparing for some kind of big storm. And then add to this, if you saw the headlines just this week, Bridgewater is also laying off almost 10% of their employees. And the major companies are doing this. We recently had Google, Microsoft, and Amazon. And when you are reducing staff and headcount, you are preparing for a storm. You are not bullish about the next 6 to 12 months. And this is why it's a chart I showed in my last video, but it's so important, it's worth showing again. This is a long-term chart of the S&P 500, and it shows the impact of recessions on the markets. So the recessions are these gray bars here, and this is the duration of the recession. So this one was a lot longer than this one. And a couple of things. The first is that we are long overdue a recession. And the second big point is that when recessions happen, it is really bad for stocks and likely crypto. So the market rolled over, hit a recession and a further drop. In a recession, the market drops, market drops, market drops, market drops, and quite significantly. So if a recession is coming to the US, this is going to be really bad for stocks. And I think Bridgewater and Ray Dalio is preparing for a recession. Ray Dalio is the $20 billion man who the central banks go to when they need advice with money. Historically, Dalio has said cash is trash, as in a 0% interest rate world, your real return on cash is negative. However, now interest rates have been increased at the fastest rate in history. This now changes the game, and he says cash is now attractive. And when we looked at the latest moves at Bridgewater, we saw they've done some major reductions and going into cash. And so this should be a big warning to all investors. Ray Dalio is the classic smart money, and the smart money is selling. So he's clearly not optimistic about the next 6 months. And then add to that, they've also joined the list of companies laying off staff. So there you are, guys. Hope you enjoyed. Now, unfortunately, with investing, not everything is butterflies and rainbows, and Ray Dalio is clearly preparing for more downside. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.